If you felt Tesla stock was a smart investment at $908.61, how about when it's one-third that price? You haven't heard about the several perks and drawbacks of stock splits. Therefore, it's important you understand Tesla stock split 3-for-1 and exactly what it means for investors. Will it truly lead to greater returns? Let's find out. Yes, the value of a stock can be increased in several ways by a stock split.
Let's celebrate.
Contrary to popular belief, stock splits are beneficial to investors. And this trend is a major reason why large corporations like Tesla are increasingly using them. While a stock split shouldn't affect the company's total market value, a reduced share price may encourage additional investors to buy in, thus increasing the stock's market value.
Our Phil LeBeau has details for us. Phil?
Hey, Scott, Tesla filing with the SEC that it plans to do a 3-for-1 stock split. Now, this is not a surprise. The company indicated earlier this year that there would be a stock split coming at some point this year, and most expected that we would probably see it relatively close to the summertime.
Tesla stock split. What it means for investors. The stock price of Tesla, which has fluctuated for a year between $600 and $1,000, will soon be more accessible for investors as the business announced a 3-for-1 stock split. At an annual shareholders meeting, Tesla shareholders approved the split. When the split finally takes place on August 25th, an investor who formerly owned a single share of the company will now own 3 shares, each of which will be worth 1/3 of its original value. Given that the stock closed at around $865, the post-split price per share would be just about $288. It is common practice to split a company's stock to make it more liquid or tradable by investors. The action will effectively triple the number of Tesla shares available to investors, but will not affect the market value of the company or the value of any individual investor's stake. An additional way that stock splits can increase demand is by making previously out-of-reach stocks more affordable to retail investors. Following a stock split, the value of your investment will remain the same. The only change is that your shareholdings will grow. Similar considerations apply if you have a small number of shares in a corporation. In the event of a 2-for-1 stock split, an investor who previously held only 1 share would now have 2. This means you would have 100% ownership of that stock. Even though stock splits don't affect the stock's value, shareholders strongly applauded Tesla's split because it increased liquidity. Technology firms with skyrocketing stock prices often resort to stock splits to make trading in their shares more accessible to individual investors, even though stock splits are essentially superficial. Why does Tesla want a stock split? Keep watching to find out. By subscribing to this channel, you may discover more relevant information about the financial industry and keep up with the most recent financial news, enabling you to make the best investing decisions. This is why Tesla wants to split its stock. Tesla has claimed in its proxy statement that the primary rationale for attempting to divide its common stock is to attract and retain excellent people. The company boasts that it offers equity to all of its workers, unlike its competitors in the manufacturing sector. Shares of Tesla increased in value by 43.5% between the time of the company's last split in August 2020 and the date of the proxy statement, June 6, 2022. It has made further progress since then.
Thumbs up.
Tesla claims that a split of its common stock will allow its employees greater flexibility in managing their ownership due to the stock's lower market price. The company thinks this approach to boosting morale will ultimately benefit stockholders. What should we all expect from Tesla's stock split? Buckle up, we're about to dive into it. A stock split is something Tesla is considering since it will lower the price per share and make the company's common stock more attractive to individual investors. In a company statement earlier this year, Tesla explained its rationale for pursuing a stock split, writing, "The stock split would help reset the market price of our common stock, so that our employees will have more flexibility in managing their equity, all of which, in our view, may help maximize stockholder value." What to expect from Tesla's stock split? Already, stock splits are emerging as one of the summers of 2022's defining market trends. Tesla has been prohibitively expensive for most ordinary investors for some time now, with its stock price reaching $1,000 per share. The 3-for-1 stock split is hoped to change that and encourage more individual investors to invest money into the business. With regards to institutional investors, numerous funds currently hold the stock. The largest institutional investors include Vanguard, with over 65 million shares, and BlackRock, with over 55 million shares. As a matter of fact, almost 3,000 different organizations have purchased Tesla stock. Existing shareholders benefit from this type of ownership, but new investors may have a harder time gaining access to Tesla's stock. Increased accessibility to the electric vehicle industry for small investors may be possible with a 3-for-1 stock split. As for what Tesla's new split-adjust share price will be, we won't know until it happens. A stock split may tempt investors if the formerly more costly stock is sold at a significantly reduced price. However, a stock split is seldom a reason to buy. Do your homework, monitor stock charts to determine when to make purchases, and zero in on firms with strong fundamentals and strong price performance within their industry group. A stock price prediction for Tesla is something you should not overlook. Watch our video on exciting new Tesla stock investments. Exactly how much Tesla shares will be 2025. I hope you got a kick out of watching today's video. Thanks for watching, and we'd be happy to see you in our next video.